a little controversial maybe, but there have been such initiatives before as well, or are ongoing as well, where loan is being given to these individuals and businesses, but the outstanding is not being able to. So how do you is Yabex doing it more sustainably, because loan is being given out very leniently at this point of time?
Yes. No, I think that's a big concern actually, and thank you for bringing it up. See, while there is a dark side to the micro loan kind of business, and I think our view is that there is a way to do it sustainably, and there is a way to do it in a slash and burn kind of way, which is not healthy, right? So if you, for example, if you have a base of customers and you make a choice to give credit to everybody,
yes,
hypothetically, or you make a choice to cover a very large set of people, right, with a ticket size that is healthy, very good from a customer standpoint. Everybody gets 10, 15, 20 or maybe even $50, right? We have seen examples of credit programs that have failed precisely for that reason. I mean, actually, to give you an example, when we worked with one of the telecom operators in Malawi, we inherited a portfolio where they had disbursed a few $1 million, but quickly they ran out of money, and the default rates were so high, it's like in the 40-50% range, that practically that whole portfolio was shut down, right? And obviously we inherited such a portfolio like that, and we managed to recover a large part of that money and actually bring down default rates to almost 5%. So going down from 50 to 5 with the same exact set of customers or market, let's call it that, which somebody else was running. So there is a big difference in terms of how risk can be managed. And I think it's about doing the basics right, because it's very easy to have some set of rules which are fairly relaxed and give credit to everyone hoping that they will pay back. But if you are able to assess the customer's cash flow, not just from a historical standpoint, but from a forward-looking standpoint, and that's where the role of machine learning, AI, and a lot of the analytical tools come into play, we can, with fair degree of certainty, make predictions about a customer's propensity to spend in the future, customers' propensity to remain loyal to the underlying network, be it the telecom or the wallet network or the banking network, and the customer's intent to repay, right? And you can establish that with small amounts, right? So if you are able to do all these things reasonably well, at least you will avoid making huge mistakes, and you will mitigate the amount of risk or exposure that you're taking. I mean, there is still some credit losses that you will always have to take to build a business. But in our experience, over a few years, at least in the second or third year, you should be able to reach a stage where the portfolio is healthy. One other point I'll make is, unlike other markets, Africa, the pricing is actually fairly high. Actually, to be honest, the pricing that is available in the market, given the high risk that you mentioned, is typically also on the higher side. And I think if we are able to do this business sustainably, we'll be able to bring down the prices that are charged to the consumer in terms of the cost of credit over a period of time, particularly as the customer kind of scales the credit ladder, right? So net, I would say, done well and done in a manner that is responsible, it is definitely possible to create healthy portfolios in our experience, but it is quite possible to also have portfolios that are not sustainable, where you charge a lot to the customer and the default rates are really out of control, and those programs typically end up getting shut down for those reasons. But I think the collateral damage, I think that is what you're referring to, is that a lot of people end up getting blacklisted because of this issue, which we believe is actually something which needs to be discussed and thought through in terms of how to make sure that the customer's record is not unduly impacted just because of some of these unhealthy practices of lending which some of the participants have engaged in.
The next thing that I want to ask you, that you have had a good amount of experience in the market, as I had mentioned. It's been a few years now. So are there any cultural, patterns, are there any societal norms that directly affect borrower repayment patterns? Are there any borrower insights you'd like to share with us?
Yes. No, I think it's interesting that you asked this question, because I think coming from a retail background, micro lending or nano lending, as it's called, still is a different kettle of fish. So normally in a credit product, what you do is you do a lot of underwriting upfront. You have a lot of information about a customer or an individual or about or a company, and the idea here is you want to make sure the customer does not default, right? You don't really expect them to default, and even if you have an expectation of a default, the chance of default that you're willing to accept as a risk manager or a risk officer is okay. It should not be less. It should be less than 2 or 3% at most, right? That's typically how retail lending has been thought about in a traditional classical sense, right? In the context of micro lending, if you take that approach, you will end up qualifying very few people, because most people probably the information that you have is not enough to make that sort of a determination, and you will have to accept a slightly higher risk appetite to begin with, right? And then you'll have to work from there. And the first thing to keep in mind from a credit education standpoint, particularly in markets where people have not experienced these products, is that you will not get the benefit of doubt when you are the new lender in the market. I mean, you lend it out, you say you are XYZ finance company or bank, customer is not going to immediately transfer their loyalty that they have to the underlying platform. Let's say they have a loyalty to the telecom company or the wallet. They definitely love the wallet. Doesn't mean that just because you will be the first in line to get paid in case there is an issue with their cash flows, right? So you are going to experience at the time of launch a set of customers who will test you, who will probably not repay you for whatever reason. And the way to manage it is to make sure that you do not take up a very large exposure to begin with. And that's why I mentioned the point about having small limits to begin with. You take a low and grow approach. The product that you launch need not be the big ticket loan, right? The product that you launch is, okay, I'm just going to finance the airtime bundles that you buy. Keep it very small. You keep the use case very small. So, so what happens is 100 people buy airtime bundles. Okay, they need to recharge it. They take your $2 loan or $5 loan and they repay. Now, the 20 people who don't want to repay, you can weed them out at a cost of $2, right? As opposed to giving them $100 and finding out that they're not going to repay. So the key thing is you have to take a farming approach. You start with a product where you do not take a large exposure. You find the people who have the intent to pay, who actually have the ability to pay, who have cash flows and who are okay with the process that we have in place, and you can get the customers who are the good customers. Those are the people that you want to bet on and invest and grow and give them different products, do the purpose-based lending that we talked about, eventually graduate them, right? So over a period of time, your portfolio will look healthy, will become healthy, because some of the customers who are risky, you are mitigating the risk by giving them very low amounts, and you're weeding them out in some sense over a period of time, and you're letting the good customers grow.
Yeah.
And in a way, just like any other investment, right? You invest in 10 things, a couple of them work out, and then you double down on that, and then you let some of the other pieces kind of slowly kind of exit your portfolio, right? So that is the thought process that we have here. And it does require a little bit of patience with respect to taking some upfront risk, both in terms of capital as well as in terms of credit losses. And that is something which we constantly work with banks on to educate them on, because that's something which becomes a challenge for someone to enter the micro lending space. So that is what our experience has been so far.
All right. So the last question that I'd like to ask you is, given, as you mentioned, there's risk involved, and there you don't know which side the portfolios are going to go. So even if there's so much risk involved in lending, the kind of lending that we do in the kind of markets that we are in, what is going to be the butterfly effect 10 years down the line of providing small ticket loans to these individuals and businesses? What is the long-term game here?
Yeah, so beyond, we started by focusing on a specific problem, right? And any startup, at least I personally believe that rather than spreading yourself thin, when you have limited resources, it's very important to focus your energy on one problem and try to solve it. So that problem was basically solving the problem of access to credit for the bottom of the pyramid, right? And in a way, that is a foundation on which we believe we can build this, I would say, credit identity for individuals across different products that they can consider. They can be considered both by banks as well as other financial companies over a period of time, and they can build that credit history, which in turn can enable them to borrow for multiple needs, be it building a house, be it buying a car, be it starting a business, etc. Right? So the way we think of it in terms of the long game here is, while we start here and build that financial platform to serve the bottom of the pyramid, we are also parallelly building a software and technology stack, which allows us, which have two parts to it. One is basically a platform that enables a customer to digitally get credit, whatever type of credit they need. So that's your loan origination and loan management and collections platform. And then there is an intelligence layer, which is the data and analytics and machine learning, which allows us to intelligently assess who should be offered the product for at what price, what amount should be offered, how do you manage the customer through the life cycle, what other products can they be eligible for, how do you mitigate the risk of those people who may not pay, etc. Right? So these are the two major elements of our platform. And what we have done is to build these things in such a way that it is agnostic to the product itself. So if you take a step back about, okay, microloans is one product that we are running end to end by working with banks as well as mobile money wallets as well as telecom companies to serve the bottom of the pyramid. But the thought process, the eventual game here is, over a period of time, once you build this repository of customers, right, kind of look at the need of the customer from a credit standpoint. I mean, ultimately you can break it down into 4-5 dimensions. How much money do you need? What is the size of the quantum of credit that you're looking for? What is a customer segment? Who is a customer who is asking for credit? Is it a consumer? Is it a business? Within that, what sort of business is it? What sort of consumer is it? Is it a salaried consumer, or a self-employed professional, or self-employed who's running a business, etc. Right? What is the end use? What is it? What is the purpose of credit? Are you borrowing for a specific purpose like buy now, pay later? You want to buy something specific. You're borrowing to buy a car. You're borrowing to build a house, right? What is the purpose? Or is it basically personal loans or credit that you want to take for discretionary purposes, right? There is a structure of the loan itself in terms of, is it short term, is it medium term, long term, is it a term loan, is it a line of credit? And then the last thing is, are you looking for credit from a unsecured standpoint, or are you also putting some collateral? In the case of a home or a house or a car or something else, it's essentially, or even a business, it's basically some sort of asset is offered as collateral in certain cases, right? So across these 5 dimensions, ultimately you can construct different kinds of credit products to meet the need of the customer. And ultimately the differentiation that we want to offer on our platform is the ability to create these products, configure these products flexibly, and create a digitized journey. Either it is self-serve or it is assisted. Because if it's a home loan, you probably cannot do everything by yourself. You'll need some assistance from somebody, and the bank manager or the bank, somebody in the bank could take you through the journey. While if it's a small ticket loan, you can do it by yourself, right? So enabling the digitization, the workflows, the intelligence that supports it for decisioning, allow that software to be offered as a service to the banks, so that they can configure these products according to their needs, and they can build these products, and it's almost like Lego blocks. And over a period of time, you assemble your products, be it to serve consumers or small businesses, and that allows each bank, who has the aspiration to build a retail and small business franchise, a digital bank, to serve those customers, to do so using our technology. So that is essentially the long game that we have. And in terms of what we offer as a differentiation from our technology standpoint, I would say it's, do we have the ability to cover a wider set of customers? And that's where I think building the bottom of the pyramid comes in, because the good customers from there can be offered some of these products. So you can increase the coverage of some of these things. The second thing is, are you able to offer it in a manner that is faster? I mean, so does it take like a week for you to get an approval versus maybe only 2 days, right? Or if it takes 2 days, can you do it the same day? Etc. Right? The third piece is, over a period of time, are you able to construct products which are meeting the needs of the customer? For example, somebody who wants to take a business loan, they may want the payments to be smaller to begin with, when the business is kind of still finding its feet, and then later on they have larger payments, right? I'm just giving an example. There may be some other customer who needs a working capital financing, which is actually very short term in nature, because they are just buying inventory and selling it, and there is a cycle associated with it. So depending on the need, you need to construct the product with the right duration, the right pricing, the right construct, so that it meets the needs of the various customer segments. So that is important to be able to configure. And the last thing is, I would say, to what degree are you able to take all these things together to manage the risk better, so that the cost of credit to the end consumer is lower over a period of time, right? And at least a customer who has developed that experience should be able to should be rewarded for their loyalty in the form of lower prices or lower cost of credit when they want to access it, right? So if we are able to do all these things right, I would say eventually we'll end up with a software and a technology stack that we offer as a service to banks who are able to build their own digital lending portfolios to serve consumers and small businesses. And in a way that becomes our contribution to the ecosystem, starting with the base of the pyramid then building upwards. So that is basically how, at least I think about how we can make a small dent in this large problem that we are trying to solve.
Thank you so much, George, for joining in today. It was such an interesting conversation. I hope whoever is watching found it helpful. If you found it helpful, then please like, share and subscribe to Tech Behind It, and we'll be back next week. Thank you.
Thank you very much. Thank you for the time.
Thank you.